Welcome back to the Watch List. I'm Diane King Hall here at the NYSE. Let's take this crystal ball effect and talk about predictions for 2026, sectors to watch, overall market action. Joining us now is Patrick Mueller of Bella Advisors. Patrick, Happy New Year to you. Thank you so much for joining us. You say the market's acting like it's had a double espresso. Listen, I had a shot today. Eventually that double shot wears off. What do you mean by that when it comes to the market?
I think we're going to see that, Diane, and Happy New Year to you. And we've seen 20+% growth basically for the last 3 years in a row, and it just doesn't show any signs of slowing down here. But I think we have to have a pullback here at some point, right? The market's going to take a nap at some point this year, I think, after that double espresso. And I think there's going to be a lot of different factors. I think the biggest thing is just the tariffs. The tariffs have to start impacting the markets and earnings. I think we could start seeing a factor in that and having a pullback here in the first part of this year.
There's been a little bit of, spreading out of the gains beyond the Mag 7 when you think about the ultimate performance of 2025. But a lot of it still has to do with the AI trade and the tech trade. When you think about market concentration, are you expecting that kind of concentration in 2026?
I think we're going to continue to see that train moving right along. And I would just caution people not to have too many eggs in that basket. Make sure that you're diversified a little bit away from tech, and we're at all-time market highs right now. So there's never a better time to take shifts off of the table and start reshuffling and taking some of those profits, because it's only a paper gain. And we want to make sure we get some of that money in our pocket and then redeploy that throughout the course of the year when we do see some of these rocky times. But it only takes somebody like, for an example, NVIDIA, for them not to hit their earnings in February to see a big pullback. So I'm very much bullish long-term on tech. I think it's going to be good, but it's been soaring so much. We're overdue for a pullback here.
So NVIDIA is one of the few in the Mag 7 that's remained green throughout today's session, because earlier we were looking at a heat map and most of the Mag 7 was in the red. You're seeing Google turn, Alphabet Google, which was the huge standout for 2025, now back on the plus side. How much does it matter what happens with NVIDIA?
I think it matters a lot because NVIDIA has just gotten so big. They're huge. It's bigger than 5 different market sectors right now. And it's just a big driver. So if they don't meet earnings, then that could be cataclysmic, I think, for the whole AI sector and to bring that down a big peg. So I'd be very careful having too much in that basket for sure.
So another big area of gains that we've seen, when we think about tech, is the memory names. Those were the biggest winners in the S&P 500 for 2025. Micron, SanDisk, you name the company, they were winning this past year. We're talking about 500% gains, 200% gains there. When you think about this year, is there expectation to see more of a shift to value?
I think there's definitely going to be a shift for that. And I personally like value because things have been so overweighted towards growth. I'm a big fan of Warren Buffett, Berkshire Hathaway. Having money in companies where you can close your eyes and 5 years from now, they're going to have done well. So you're not dealing with these big swings up and down like you're seeing with a lot of these different companies right now. I like that stability, but we also work with retirees, Diane, and they can't afford to take a ton of those risks. We need things that are going to be very stable, but I think for somebody's portfolio, it's definitely good to carve off a piece and have for some of those strong runners moving forward and hit some of those home runs. But I'm more interested in the singles and doubles.
Okay, you're more interested in the singles and doubles. Let's talk about your sectors that are on your watch list for this year. Tech, do you expect that to still be king?
I think tech's still going to be king. We're going to go through some type of pullback. I mean, everything can't be going up and to the right in the trajectory that it's going for a long period of time. So we're definitely going to see a pullback there in tech. And I like energy longer term. There's got to be the power. We have to have the power for all this AI, and the demand is so massive that people are really underestimating that. So investing in companies that are going to be riding that train, I think, is going to be huge moving forward, and just diversifying away and diversifying into precious metals. I think gold and silver can continue to do well as the dollar is weakening, and until the government gets done refinancing all this debt that's coming due here in the near future, we need to be very cautious of that. So I think mining companies, gold, silver, that's good to diversify into as well, even though we're hitting big time highs on those precious metals.
Patrick, let's talk a little bit about, because I think you hinted at this, the underpinnings of AI, the power players. Constellation Energy has a gain of 4% today. Energy also has a gain of around that amount today. So it looks like there's still strength there. Do you still like those for 2026?
I do. They absolutely crushed it last year, right? They were up about 60, 70% with each one of those different companies. And so moving forward, I think we're going to continue to see that momentum. I mean, we're in the Silicon Valley of the South here in Atlanta. We've got a lot of these big players here in Atlanta, and you're seeing these huge data centers just popping up everywhere. And the amount of energy that it is going to take to fuel that, I mean, it's going to be crazy to see that ride moving forward. And unfortunately, I think for consumers, it's going to start getting really expensive because of that in the future as well.
Okay, let's talk about financials. I know that's on your list as well. I've talked to other, experts, portfolio managers, et cetera, who are expecting financials they had a strong year last year. They're expecting to see that strength this year. What's your view on financials like JP Morgan Chase, Citigroup, et cetera?
I think they're going to continue to be strong as you start seeing regulations lowering. We're going to start seeing more IPOs here in the future. And so I think that's going to be a really strong factor and something to pay attention to. And one of those things where you can have some type of stability in your portfolio. So I like JP Morgan, and I also like Burke B shares. And you've got Warren Buffett right now, or you say Burke B, he's no longer running Burke now, but they've got over $380 billion sitting in cash. So they're waiting for this downturn that we're going to start having, this pullback. So you just want to make sure you've got some cash ready to buy the dips throughout the course of the year, because I think it is going to be a rocky year for a lot of different things. We don't necessarily know what the catalyst is going to be at the moment. It could be so many different ththings, but just be ready for that. Just like we saw last year, I think we're going to continue to see more of that, but I think we're going to end up, pretty well this year, maybe, somewhere around the 10, 12% range by the end of the year.
Let me ask you, speaking of the potential bumps, what are the risks that you're watching out for this year?
The biggest risks is really the AI, the tech. Everything is so overweight right now. You've got, 10 companies in the S&P 500 that make up almost 40% of the growth of the S&P. So things are just so far skewed, and you just want to make sure that you don't have too much tied to that. You want to make sure that your portfolio, you got so much money sitting outside of those things. And we use something in my business called the rule of 100, and take your age, and that should be the percentage of your money that is safe and protected from market losses, because our clients are retired. So we got to make sure that so much money is safe and protected, and that remaining amount, it's okay to take risk with. So you just want to make sure you don't have too much money tied to these different baskets. So when we do go through a big downturn, just like Warren Buffett says, you don't want to see who's swimming naked when the tide goes out.
We certainly don't want to see that. All right, Patrick, we'll leave our conversation there for today. That's Patrick Mueller, president of Bella Advisors. Thank you so much for your time today.